Welcome to Legacy Money, the show that helps you live more, give more, and leave more. I'm Barry Page, your host, and I'm not here to entertain you. I'm here to inform you and hopefully educate you. In this episode, we're going to cover the infinite banking concept and real estate investing and how they may work together to help you improve and increase your profits. I'll share with you some of my personal experiences working with infinite banking and with real estate. Okay, let's get started. We're going to talk about real estate investing and the infinite banking concept and maybe how they can work together. So it doesn't really matter if it's apartment complexes or single family residences. Infinite banking works really well with real estate, and a lot of real estate investors are attracted to the infinite banking concept, but they can both definitely stand on their own. I just want to share with you some of my experiences working with the two of them together. So my journey starts with a little story about some books, and it says here leaders are readers, and that's what I gathered from one of the books I read. I'm here shaking hands with one of my early mentors, Sam Moore. Sam was the president of Thomas Nelson Publishers. They published a lot of self-help motivational books as well as being the largest Bible publishers in the world. But that's really where my journey of self-education began, was in the book business many years ago. I'm in college in this picture. Later on, I read a book, Rich Dad, Poor Dad, and that really kind of changed the way that I looked at money and creating money for the future. And there was a lot of advice that I've gathered from gurus along the way, but in particular, Robert Kiyosaki was one of my favorite authors, and he, of course, wrote the book I just showed you, Rich Dad, Poor Dad. But here's what he said. He said, to control a car, the key is driver's education. With assets, the key is financial education. So I set out on my journey of self-education. Even though I graduated from college, I really just felt that there was more to learn about working, about cash flow, and about money. So I listened to what he had to say. He said play games. So he created the board game on the left there, Cash Flow. And I had already played Monopoly, but Monopoly has actually become a family favorite. We play over the holidays. But I got my kids to play Cash Flow. The Cash Flow for Kids game is a little different. And we seem to prefer Monopoly just because everybody is used to it. But these games can definitely help you further your financial education. Then I started learning about the cash flow quadrant, which Kiyosaki brought up in his book, but I was really starting to think more like a business owner, an entrepreneur, and that really started to make sense to me. And along with my reading, I was doing a lot of listening to self-help type books, and one of my favorite authors here was Jim Rohn. He said the philosophy of the rich versus the poor is this: the rich invest their money and spend what is left. The poor spend their money and invest what's left. So that really got me to thinking about, how could I be rich and what could I do to accumulate money? And of course, you've heard of this gentleman, Warren Buffett. He said diversification is required when investors do not understand what they're doing. And that really got me to thinking. Investors, this man is known as the world's greatest investor from many accounts. And so I was thinking, well, what does he mean by that diversification? So I started diversifying and investing in rentals for cash flow. Robert Kiyosaki spoke about cash flow, and his favorite way to accumulate and create more cash flow is through real estate. So my new wife was already starting to learn this. Her father was an investor in real estate, so we kind of tagged along and learned from him. He had learned about real estate investing from Carlton Sheets. You may have, some of you older guys and gals may have heard some of his video or trainings and watched his videos or listened to his tapes. So that's what we started doing. So we were buying a property or so a year, and I had started a business already, so I was already somewhat of an entrepreneur. We were saving money, and these rentals, man, this stuff just was really exciting the more I learned about it. And so we accumulated more. We, at one time, got up to a dozen properties. I had, at the point I'm going to share with you, 9 rentals. And we were using them, again, the ultimate goal was passive income. We were still active investors at this point, but we were accumulating assets, and we were using these for cash flow. And along then is when something happened. Nelson refers to it as the arrival syndrome. So this was the beginning of my awakening, and I was introduced to this book here, Becoming Your Own Banker. I was just getting into the financial services, the insurance business, and I was blessed, fortunate enough to meet Nelson Nash. And I had actually, a client of mine told me about this book. I had seen the PDF, but I had to rush out and get the book once my client started talking to me about it. So here I am, pictured with Nelson many years ago. And again, this was really the beginning of my awakening. This man was just a walking, talking encyclopedia of history and economics. And I was just drawn to him and very just attracted to his knowledge and his willingness to continue to learn. So I took out a life insurance policy. I still wasn't, again, I was new into this business. I wasn't completely sold on the whole infinite banking, but hey, it made sense. So this is my first policy. It was actually my second policy. My first policy was a term policy for $1 million, a death benefit. And what I did with this policy is I converted, as you see here, 100,000 of the policy. So I created a whole life policy. The premium was about $6,000 a year, and I added another $3,600 to the waiver of premium for a grand total, the PUA rider, and we had the waiver of premium, so for a grand total of $9,901.60 a year. I was putting into this first policy. It was paid up at age 96. So this was my first experience into it, and I really wasn't planning on banking at this point. I just was doing this policy. I was in the business. I was learning a little bit about infinite banking. I'd read the book, but this was my first stab at it. And along then, I started just diving really into banking and what it was. And this quote really started to, again, awake me to what was really going on in the banking industry. It's from Henry Ford. He says, "It's well enough that people of the nation do not understand our banking and monetary system, for if they did, I believe there would be a revolution before tomorrow morning." Now, this was written in the early 1900s. The vehicles, the cars, the automobiles were just being invented. And Henry Ford was having to deal with the banks, and he saw how the system worked. And this quote, just to me, man, the more I learned about banking, it really started to set in. So here's how banks work, right? Quick, give me your cash. The banks want our money. They want control of our money. They want to hold our money, and they want us to leave it on deposit with them. But here's the problem. You see, when we borrow money, whether it be for credit cards or whether it be for bank loans, it creates a headwind, right? This headwind is the interest and the fees that we are paying. Now, Many people say, well, I pay cash, so I don't have that headwind. Well, as Nelson points out in his book, we finance everything we buy. So whether or not we pay interest to someone, if we pay cash, we give up the ability to earn interest. So the problem, again, is the headwinds, and whether it be the lost opportunities or it just is the interest and the lost opportunity on the interest that we're paying. Okay, but there are headwinds. Now, again, this was the awakening. I was like, well, what could be better? I'm already earning cash flow from my rentals. I have a business. We're saving money. But it just still, it took me a while to get this. As it does most people, I'm a slow learner. So I still had the headwinds. I was still paying interest. I was still paying mortgage interest. I had credit cards. And though we paid our credit cards off, I still was dependent on the banks. And when we learn how to eliminate the headwinds, then this tailwind that we may have from our saving or investing or whatever we're doing can multiply, right? We can go twice as fast because we've now eliminated the headwinds. And I'm going to show you this here shortly in real numbers. So real estate and banking, how do they go together? Well, on page 12 of Becoming Your Own Banker, Nelson said, bankers are not lending you your money because you have real estate. They're doing it because they think you can make payments, right? So the banks, they don't really care so much about the real estate. They just know that the real estate is an investment, and it's also, or it could be our house that we live in. So they realize that we're going to want to make those payments. Now, ironically, in Nelson's book, when he came up with this whole idea of the infinite banking concept, he relates his personal experience. And this is how he discovered the infinite banking concept, through praying about what was happening in his life. At the time, he was a real estate investor. He owned about $500,000, primarily just raw land, properties he was investing in. And at the time, in the early 80s, he was paying about 9.5% interest on this real estate. And he was hoping that it would appreciate over time. But along came then, and interest rates went up. Jimmy Carter was president. We had inflation, and the rates went up on him to about 21%. So that was an additional $67,500 of unexpected annual interest that he was having to pay, in addition to the other interest. So I think it added up, if you just did the numbers, about $110,000, $115,000 of interest he was paying every year. So that was his awakening that he talks about. My awakening came from experience, from learning. And here's Nelson giving seminars. I immediately, once I met Nelson, invited him out. I went to think tanks, and I started learning. I've seen Nelson speak many times, and he did many seminars for me, and I just started learning. I learned something every time that I saw Nelson, every time that I heard him. I listened to the CDs, and every time that I was at the think tank, and every time that I read this book, which I've read multiple times, over 20 times. So that was my awakening of infinite banking. I have to learn from experience, and that's how I learn. So let me kind of look at the numbers with you. Now, hopefully you can see this. I will try to zoom in. So let's see here. Now, these are my actual properties. These were rentals that we started buying. These are the addresses, and this is what we took out mortgages. And at this time, this was what was owed on the mortgages. This is what the properties were worth. So I was nearing $1 million right now at this point of assets. Now I still owed over $500,000, so that wasn't on mine. But in my mind, hey, I'm getting close to that millionaire status with my assets. So I was excited, and of course we had mortgages on these properties. So this was our PITI, principal, interest, taxes, and insurance on the properties, and this was our rent. So as you can see, monthly, our expenses were $49.33 a month, but we were collecting $8,270 in rent. So, hey, we had positive cash flow every month of $3,300 and some change, and our equity was going down because our principal and interest payments were paying down the mortgages. What could be better, right? We had tenants, we had property, and we were cash flowing every month. I had a successful business, I thought. I was building the business, but things change, and here's what happened. So Nelson says, learning to control it is the most profitable thing that you can do over a lifetime. He's talking about our money. And who's really in control of our money? Is it the banks? Is it the government? Who's really in control? Is it interest rates? Is it the dollar? I was confused, really. I didn't quite grasp the importance of this quote that Nelson had made. And then I realized that I had really no control. I had no control over the weather. And this picture here is Hurricane Katrina. Hurricane Katrina came to the Mississippi Gulf Coast, where I live, right here in 2005. We had just given birth, my wife, to our third child. And our lives changed, literally. We had a new baby, and the hurricane hit. So we had just purchased 2 brand new properties, and we had blue roofs. All of a sudden, we had to go out and put blue roofs on all of our properties, and because we had lost the roofs on all the properties. So what's going to happen now? Well, we had to wait on insurance. We had tenants moving in or already in our property, so we had to secure the homes. We had to protect them. We had to protect the assets. And so we had to put roofs on them, and we had to call roofers. Well, the roofers are busy. You didn't know who to trust, but and the insurance wasn't there. There was this big argument. So we realized that we weren't really in control. Now, property and casualty insurance we had, right? We had insurance on the properties. We had insurance on our vehicles. And the financial institutions require that you have it. Why? Because it protects them. You see, the assets aren't really ours as long as we're paying them, right? So when you have a loan, whether it be for a mortgage or for an automobile, you have to have property and casualty insurance. It's required by the banks. So the banks held the mortgages. They were in control. The banks required insurance, but only against natural disasters, not for cash flow or disability or any of those things that could go wrong. See, I couldn't control the weather. And I quickly learned there were different types of coverage even. There was the normal fire, which most people have, but after the hurricane, and as of the hurricane, we discovered, hey, now you got to have flood insurance and a separate wind and hail, because what caused the hurricane? What caused the damage to the house? Was it the wind? Was it the rain? Was it flooding? What was it? It wasn't a fire. That's what the insurance company said. So, nonetheless, I needed access to capital. Where was I going to get capital for repairs? We had to have it quick. I had, again, tenants in these houses, and if we're going to collect rent, Well, we've got to have a roof over the heads of these tenants. So we had to go out and get roofs on these houses. Again, we still did not have insurance money. We didn't know how long that was going to take, right? So we had to make loans. I made loans against my life insurance policy at the time to get the roofs on the houses while we waited on the insurance to come through and pay the claim. All right? So what happened then was something else that was beyond my control. So the insurance companies raised the rates. I had no control. They now required us to have a separate wind and hail policy and a flood policy. I had no control over this. Our insurance premiums doubled and in some cases quadrupled. The government got involved, and because many people were moving away from the Mississippi Gulf Coast, they had moved north because insurance rates had gone up and they didn't know if we were going to have another hurricane. So the politicians, in their infinite wisdom, said, well, hey, we've got to replace this tax base. So they raised property taxes. Again, I had no control. I was still looking at real estate. I still liked it. I was just looking at it differently now. But the oil spill came, and again, this is the Gulf Coast Horizon oil spill, and you probably remember that. There was massive job layoffs in our area. The fishermen couldn't fish, the restaurant industries. A lot of my clients actually worked on oil rigs. I won't say a lot. I had a chemist and a couple others that were working in the oil industry. And so they were losing their jobs, or they were concerned about what was going to happen as well. So I lost business because of this. And again, what happened was tenants weren't paying their rent. They were still recovering from the hurricane. They had multiple people living in our properties. We were trying to be just good landlords, but that causes wear and tear on the rental, on the house, right? Oil spill comes along. We could not now find tenants. It became harder to even get a property rented. We used to could rent a property, get it turned around in less than a month. Being really, Nelson calls it the arrival syndrome. I thought it couldn't get any better. But this is what happened to me. And I had to rethink everything. So again, I'm starting to dive back into this banking. This is directly from Nelson's book. Banking is a process. It's not a product. So I'm starting to learn that these policies that I owned weren't necessarily about the policies. They were not about life insurance. I was able to use them for banking to pay off debt, and literally for cash flow, I was able to live off of my policies. At this point, I had 3 policies, I believe, and they were loaned out to the max. I really had to come to grips with reality. People weren't doing a whole lot of financial planning. After the hurricane and the oil spill, they were looking for jobs. And so I had to really start looking at this banking and sharing it with more people. So here's what I discovered, that banks understand the velocity of money. They like to turn their money over and over. So that's why they kept loaning me money for mortgages. At this time, again, we at one time we had 12 different properties and mortgages outstanding. And so they kept loaning us money, and they liked loaning it over and over. We paid our mortgages on time. We paid our bills, and they liked that. So they liked loaning the money over and over again. And I was starting to understand the differences, because now we had different mortgages. We had ARMs, we had 30-year mortgages, we had 15-year mortgages, and I even got a mortgage license. So I was really looking at this different. And I was like, wow, banks understand something here. So here's the difference. There's banks and there's insurance companies. They both loan money, right? But here's really the difference. See, the banks work under the Federal Reserve System. They have fractional reserves. That means they can loan money that they don't have on deposit, right? More than they have on deposit. And what this does is it creates financial tyranny for the average person, family out there. It's serfdom. Really, we get locked into this. We're taught from an early age to build up our credit and to depend on banks when we need money. And they're more than happy to loan it to us as long as we have money, right? As long as we have cash flow and a way to repay the loan. On the other hand, with insurance companies, you can create your own private financial system for your family, right? You can do what you should be doing anyway and protecting yourself and your family, and you can make loans to yourself through your policy. You can use it as collateral. So you have 100% reserves. The banks aren't going to loan, or the insurance companies aren't going to loan you the money. That's really what you're doing, is you're borrowing from a larger pool of money, right? And you're using the policy as collateral, okay? So this creates financial freedom. We now have our own system. It is the truth about money because we can operate the same way that the banks do. So you may be asking yourself, why life insurance? Well, life insurance is the cornerstone of your financial plan. Without it, all else can fail, right? You could die, obviously. Life insurance replaces whatever you set the policy up to begin with, hopefully with some economic thought to it. You gave some thought to your economic value, or you will, and you start looking at it from a little bit different perspective. So it is the cornerstone. It's really, though, a multiple resource. It provides multiple benefits, similar to a Swiss Army knife, right? Because life insurance, first, it protects you and your family. Second, it's a savings vehicle. It provides growth on your money. Your capital will compound over time. But we're bringing in a whole nother realm with the financing. Nelson looked at it differently, and he encouraged us to think differently. So why infinite banking? What's the big idea with this? Well, practicing infinite banking, of course, is not creating a physical bank like we know of. It's really just a way to create a system that we can store our capital and finance our major purchases. And that way we don't have to depend on traditional banks. Now, inherently, this practice builds our net worth over time, and it can create tax-free generational wealth. Now, IBC alone can eliminate the need for hiring expensive attorneys and accountants and creating elaborate trust and additional legal entities that you have when you get into real estate as a real estate investor. Or just own your own. Maybe you own a business. Maybe you've been told to create trust and create entities for your business. So IBC alone, life insurance alone, can do this, right? But real estate investing is but another way to increase your net worth and increase your passive income, whether it be now or later, depending on how you structure the real estate. And that's the same with a life insurance policy. You can structure it many different ways. But the infinite banking concept combined with real estate investing, really they pair well together, and they can accelerate your wealth building. Okay? So with IBC, you can build a legacy of stewardship. And instead of just leaving assets or money to children, you can create a family banking system. And it can be used for financing, for access to capital. And you can teach your children stewardship by having them repay loans when they need access to capital, whenever they want to buy their first car or start a business or whatever it might be. You're teaching them to become independent. So why practice IBC? Again, these policies can be designed to provide liquidity. A normal off-the-shelf life insurance policy, traditional whole life insurance, will certainly accomplish many goals, but the way that IBC policies are constructed, they can provide liquidity quickly. And they also give you use to the money, to the cash values, the collateral in the policy for any reason. It doesn't matter if it's real estate, it doesn't matter if it's Bitcoin, it doesn't matter if it's an emergency. Maybe you need to replace the air conditioner on properties, which I had to do. I had 2 air conditioners go out in 1 month one time. That cost me about $8,000 on 2 properties. All right. So, but you don't have to qualify. So, had I, $8,000, most people don't just have sitting around, right? And so I would have probably had to finance those air conditioners. I was still learning about having some money set aside. And so I would have to qualify with the banks. There would be credit scoring. With IBC, you don't need any of that. With IBC designed life insurance policies, you have control. These policies can be multi-generational. You can set them up so your family and heirs can use them later on down the road, or can use this concept, I should say. So I started investing after the debacle in 2008, 2009. Now, I still look at real estate. I still look at real estate almost on a daily basis, and I purchase real estate, but for a different reason. What I've mainly been purchasing over the last, let's just say 15 years is more life insurance contracts, right? So this is real passive income that I'm setting up for later. So there's a difference between the active income, the passive income, that most real estate investors don't quite understand when they first get into it. But I've used my policies in my business. I use it, almost regularly. If you're a business owner, you know that you need cash flow. And if you're not a business owner, IBC can be like running a business. Nelson always said that every time you start a policy, it's like starting a new business. So we have profits and expenses, right? So you can look in the beginning as the premium, possibly as the expense, all right? Because we have to buy the life insurance. But what I want to show you is how to actually turn it into a system that you can use. So I was buying, instead of buying houses with pitched roofs, I was buying flat roofs. So I started buying more policies. Then I had 2 children go off to college. Now, fortunately, they had scholarships, but college is still expensive. Guess what? They were also they want cars, so we have to buy cars, so we finance vehicles. We help pay for college, and now we're using them to buy more properties. And I still have a few more policies that I know personally I will convert later on down the road, because I've held some term insurance that I can convert later on. So this is what my policies are doing for me now. First, they're providing cash flow. Obviously, they're protecting, but they're not only protecting me, now they're protecting my business. If I need cash flow, which again businesses do, in my business I don't get a regular paycheck, right? So my income fluctuates. So it's good to have access to capital if I need it for cash flow, right? So they're providing cash flow and they're protecting. And again, my policies are growing just as the real estate will appreciate. My policies are actually compounding. So they're going to grow guaranteed. My real estate is not guaranteed to grow. We could have another hurricane. We could have another debacle. Real estate prices could go down. You can lose real estate. So there's a lot of risk there. I still like real estate. They're a asset of choice, but there's risk involved. So here's the dirty little secret. Banks own life insurance too. The FDIC recommends that they own it. So banks actually own more life insurance than really anyone. It's called BOLI, bank-owned life insurance. And I'm just going to wrap up. Here's the rules for infinite banking. Real estate obviously requires education. I didn't go out and jump right into real estate. As I told you, I read books, just like I'm suggesting you read books. You might, if you're interested in real estate investing, you need to learn about it. I learned from Robert Kiyosaki, Carlton Sheets, and from our family who was already in the business. So we got a little firsthand experience working with real estate. We started small, we built it over time. Infinite banking works the same way. So the first rule is to think long range. We're short-sighted. We tend to think of next week, next month. And in business, most businesses are only looking at next month or next quarter or maybe a year down the road. On the other hand, life insurance companies are looking 100 years down the road. So Nelson recommends that we also think long range. I'm thinking, well, hey, I'm probably going to be here to my 80s or 90s. So I've got another, 30 years plus, and I have to be thinking long range. Capitalize your system. So that's what I started doing early on. Again, I hold multiple policies now, and I'm paying premiums annually and monthly on one of the policies. The third rule, don't steal the peas. And by the way, capitalize your system goes for real estate as well, right? You have to, and so if you're thinking long range about real estate, you have to think, you're probably thinking about passive income later on. But in the beginning, you have to think about cash flow, just making it work. And it's hard to make real estate work in our environment here on the Mississippi Gulf Coast, at least with rentals for cash flow. So you have to capitalize the system with real estate because you got to buy the property, right? Now, of course, there's lots of ways to make money in real estate with flipping and wholesaling and all of this kind of stuff. But if you're looking for a long-term investment, think long range and capitalize the system. And again, you're not going to get rich on one rental. We had to have many rentals. So if you want to use real estate, you're going to have to purchase many properties. You have to capitalize the system. Don't steal the peas. What does that mean? Well, that means repay loans. If you make policy loans, you have to repay the loans. So great chapter on that in the book, the grocery store example, going out the back door. You cannot steal the peas. And then don't do business with banks, because when we do business with banks, right, we're just perpetuating that fractional reserve system. We're padding the pockets of the bankers and squeaking the wheels of the real estate industry, as Nelson said. So if we can learn to bring that in-house, if we can own our own debt and we can finance through our system, we're going to be well ahead. And then something that came along later, Nelson said we have to rethink our thinking. And that's what I had to do. I told you about my awakening and my experience with real estate. But we also have to think about the next generation, right? And so IBC really helps us to teach stewardship. And I can tell you, it's been a great pleasure having my son work with me part-time and just having him attend Nelson Nash seminar, and now seeing him starting to deal with money as he's in college and think about business. It's just really been very rewarding. So teaching stewardship definitely comes along with infinite banking. So speaking of stewardship, our legacy, that's what my business in this show is all about. Legacy money. And here's a quote from Ben Franklin. It said, "Certainty in this world, nothing is certain but death and taxes. Now, you may have heard that before. There's really only one asset that helps with both of those when you die and your tax bill, and that is life insurance, and particularly we're talking about the infinite banking concept. So at some point we are going to die, right? And at this point, or that point, the death benefit would be paid to the beneficiaries tax-free. So they've grown over time and they're now paid out tax-free. So depending on how you or I treat our own system, because it's our system, and how we treat it makes all the differences in the world. And that means repaying loans and contributing, putting our money back into our policies, right? So we can also teach our children and our grandchildren stewardship, even from the grave, so we can keep the money in the family. So here's the challenge. Make a change. Read and reread Becoming Your Own Banker. Read another book. If you want to go into real estate, if that's really your desire, then you need to read and learn about real estate investing. You go to college to get an education. So that's your formal education. Do a little self-education by reading and learning about what you want to do. So make a change. Invest in yourself. I've learned to save and purchase things of value. I've invested in myself. These policies are insurance on me. The banks require us to have insurance to cover their assets. Why not cover our greatest asset, our ability to earn an income and to provide for our families? And lastly, be your best. Set goals and strive for excellence in life. So that is the challenge. If you want to learn infinite banking, if you want to learn about real estate, do those things. And I hope you enjoyed our video today. Please, if I can help you in any way, leave your questions, leave your comments, schedule a time to meet with me, and I'll help you create your system, whether it be real estate or whether it be through the infinite banking concept. So I look forward to talking to you. Please give me a thumbs up and subscribe if you like this video, and I'll look forward to seeing you in the next video.